Good morning, good morning. Hope everyone had a wonderful holiday weekend out there. We'll be getting started in just about a minute here, focusing on learning how to use Bookmap, how I use Bookmap, and using it to analyze order flow in futures and stocks. All right, folks. Welcome to Back to the Futures with me, Markets and Mayhem. We're going to be focusing on how I use Bookmap to analyze order flow in stocks and futures. But first, we've got to get through everyone's favorite slide. So bear with me here. This is the disclosure. All Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. So now that we've done everyone's favorite slide, y'all are free to move about the cabin, do what you will. No, but in all seriousness, let's talk a little bit more about me for those who aren't familiar. My real trading journey began in 2005, funding my own account, trading stocks, then moving on to options, futures, and Forex. I navigated through the great financial crisis, which helped me better appreciate the importance of understanding intermarket dynamics, momentum, and macro. These are things that I eventually built systems and then models from to identify some of the trading strategies I use on both day trades and swing timeframes. My approach is systematic, driven by momentum, price action, options flows, volume profile, and the big picture. So I like to look at multiple different parts of the market, of the bigger picture, to qualify what I'm more interested in trading and where I think there's better reward than risk. I began working with Bookmap in early 2022 because I saw great value in the way their platform displays market data, including the heat map and, for futures, the icebergs and stops. Later, I built my advanced SPX options visualizer tool to better show how options impact price for the ES contract. So, you can view that with Bookmap data, DX feed, Rhythmic, etc. And I really feel like options are such a big part of the market that it's very hard to ignore them. There's about 1.2 trillion of notional in SPX options alone traded every day. Across all equities futures contracts combined, there's about 400 billion of notional. So the tail wags the dog. Now, before we dive into Bookmap, if you're interested in following my work, here's a little bit more information about how you can do that. You can obviously follow me on Twitter or YouTube. My name is the same on both, Mayhem 4 Markets. That's Mayhem number 4 Markets. Anything else of another name is an imposter, and those things are going around. Also on Discord, my name is Mayhem 4 Markets. No period at the end, no dash, no anything. So be careful who's messaging you. I don't go out and proactively message people and try to sell anyone anything. So I just post my content. If you're interested in what I have to offer, I'll tell you where you can find me at some of my other places. So my trading ideas, coaching, and unique market tools can be found at TraderAid.com. We've got an awesome Discord community. We share trading ideas, education for folks of all skill levels. It's very inclusive. Anyone can join, whether you've never traded before, you've been trading for 30 years. We've got a place for everyone. You can also get up to 40% off of Bookmap at TraderAid.com/Bookmap. That's TraderAid.com/Bookmap. The advanced SPX options visualizer that I built for Bookmap is now available on the Bookmap marketplace. Visit TraderAid.com/SPX to learn more. If that marketplace link doesn't work the first time, try it 1 or 2 more times. Sometimes the Bookmap content distribution network is a little finicky. And my long-term trading and investment ideas, research, and institutional consulting services are available at macrovisor.com. And I live stream regularly, including for Bookmap every Tuesday at 9 a.m. Here I am. Be sure to join me. So here we are inside Bookmap. And as I'm doing this presentation here, folks, please feel free to ask any questions that you might have. I will look through the chats and I will get back to those questions as I see them. If you're on the Bookmap Discord, just be sure to tag me in. But I do have all the chat rooms open in front of me. So first, let's talk a little bit about what's on screen, because I know a lot of folks, the first thing they ask me is, what am I even seeing here, right? Because it's different. It's different than most charting software that we use, and that's, in a way, a really good thing. So a lot of charts are based on candlesticks or bars or lines, and that's fine. They have their place and their purpose. What I like about the Bookmap chart is right off the bat, you get a sense from these bubbles as to who's the more dominant players, where there's aggression. So what are the bubbles showing us? These are delta bubbles. Okay, so what I mean is they're showing us, the way that I have Bookmap configured, the way it really is out of the box, the difference between buyers and sellers. Why does that matter? Because right at first blush, you can see where there's more aggression by buyers versus sellers. Now, there's other overlays and indicators that we can add in to add some nuance and some further context, but we're going to start with the core basics here, because I want to kind of imbue in you the basics of just at a glance reading Bookmap and understanding how it works. So these bubbles, the larger they are, the more one-sided that trade is. So this larger green bubble is showing you buyers were getting a little more aggressive there. And we did see a little bit of a rebound from that price initially as well. So it's helpful in the context of just understanding, especially if you see patterns, right? Larger moves, larger amounts of these more pronounced bubbles, like sellers getting just a little bit more aggressive up here. You can see that in those larger bubbles. And as we get into the cash session, you'll really get a sense as to how this plays out. So I think it's quite helpful for intraday dynamics. Like for me, what I really use Bookmap for is diving into the micro of the flow, right? So that's what's happening minute by minute, hour by hour. When I'm zooming out, I am looking at some other charts, right? I'm using TradingView, I'm using stock charts. You guys probably see me post this stuff on Twitter. I'm using research from some of the prime desks at different clearinghouses like Goldman and JP Morgan. But for the intraday, I'm zooming in with Bookmap because this is the closest thing that I have to a more institutional view of what's moving the markets. So the next thing we have on screen is the heat map itself, right? You can see these areas that are more brightly colored especially as they turned closer to reddish hues, these are areas of interest. Okay, so what do I mean by that? These are orders that are sitting on the book, limit orders, right? What it can be referred to as resting liquidity. So anything below current price that you see as one of these areas on the heat map is a bid. Anything above current price is an offer. These that are above 249 or basically 250 or greater, I set up a label for the 5 closest to price, right? That lets these stand out a little bit more. And that's using a freely available plugin that just allows me to label these areas so that they kind of stand out a little bit more, because they can be a little more magnetic, or they can, if there's enough of them, as I referred to in the past as death clouds, they can also potentially provide an area of resistance or sort of a challenge for example, if it's overhead, for buyers to show they have demand. And then obviously where there is a lack of any of these brighter colors, it is a lack of overall liquidity. Now, I do have my Bookmap tuned up a little bit to focus more on the high liquidity zones. So I don't just have sort of, the areas of nominal interest painted as aggressively. And this just helps me to focus on, again, where there's interest. Now, the heat map isn't the only place that shows this data. First, let's just talk about that heat map for a moment. Then we'll talk about the order book. So looking back, you can see this is a chart where we're moving throughout time. We've got over an hour on screen. And so this past heat map is showing where there was interest. As you look forward on the heat map here, you can see where there is current interest, a white line dividing that, right? So on the right side, that's where the current interest is shown. And you can adjust this to be as big or as small as you prefer. This is about the right size for me. Then you've got price. It shows the price of the contract or stock or whatever else you may be watching, Bitcoin or ETFs or etc. Then you've got the current order book, right? So the heat map is a visualization of the current order book, but you can always look at it here depending on what you're trying to glean. So it's helpful for me because I can zoom out a little bit and I can see exactly where those larger orders are on the current order book as well, because they pop out. The graph pops those out, so they also stand out to you visually, right? So that can be helpful. That's giving you a sense as to where there's interest. Now, the SVP, this session range volume profile, gives you a sense as to where there's been transaction. So there's a difference here, right? The current order book are open orders, have yet to be filled. The session volume profile are orders that have been filled during the trading session. So that gives you a sense as to where there's already been interest. It also gives you a sense as to where folks showed more aggression, because this is shown in deltas. Green deltas are in excess of buyers versus sellers. Red deltas are in excess of sellers versus buyers. So during the cash session, when you start to see these really aggressive deltas, if price, let's say we have a really big buy delta up here, right? Let's say it's like 4,000 or 5,000, just for the sake of illustrating an example. And let's say price moves below that really aggressive buy delta. That suggests that if those positions were bought to open, then those buyers are increasingly off sides. The more price gets off sides from them, the more likely it is they'll probably start to stop out or otherwise close their positions, right? So when you get more off sides of these aggressive deltas, it can give you a sense that one side is on the wrong side of that trade and they may be forced to exit, right? There's no one that's a more motivated buyer than a short that's on the wrong side of a short. There's no one that's a more motivated seller than a long that's on the wrong side of a long. And so knowing those offsides positions can help you a little bit more qualify where there might be some addition to momentum. Now on the rightmost column here, we have the Advanced SPX Options Visualizer. This is the add-on that I built for Bookmap. And what this is showing you is where there were flows. This is the data captured as of Friday, the last active trading day. It'll update again as we get into the trading session today. And we can see where there are these key levels of interest in positioning. That wall of calls is around ES, let's call it 5218 or so, and SPX 5400. Just like that wall of puts is closer to around 5,000 S&P. And we can see these levels as places where we may have interaction with price. We also have the gamma flip level calculated. We're currently mildly above gamma, which just suggests it's more likely that you'll have sellers, essentially market makers changing their hedging strategy a bit in positive gamma versus negative. So in positive gamma, market makers are more likely to be sellers of rips and buyers of dips. In negative gamma, it's a bit of an exacerbation of realized vol. That's to say larger realized price ranges. And in that environment, market makers tend to be buyers of rips and sellers of dips, right? So it's important to watch that gamma flip level. If we go meaningfully below it and build acceptance, that tends to catalyze more volatility. Now you hear that knocking sound, that does have to do with aggression. This is the market pulse indicator. We'll get to that in just a little bit here. But first, we're going to go to the subchart, and then we're going to go back to the map and talk about some of these indicators here. So the advanced SPX options visualizer, once we have some trading data in after the market opens around 940, 945, we'll start to see where those flows have evolved, where positioning may be changing a bit, and we can keep an eye on that through the trading session to get a sense as to where there may be potential exit points. If we're trading the market, like I don't mind taking a long up to that hot call and then taking that position off, for example, because that tells me I'm getting out where there's a lot of interest. And typically I'll go 1 to 2 points below that. Similarly with resting liquidity. And one thing you can see is where there was interest on Friday, there continues to be interest today. So you can see that hot call level correlating pretty well with that resting order just below 53.45 as well. That's not really a coincidence. It again speaks to how much options influence the futures market. So going to the subchart here, first we'll focus on the lower right quadrant. We have 4 radial indicators, and these tell us just at a glance a little bit more about what all's going on. Okay, so the liquidity differential is giving you a sense of total order book liquidity. That's the way I have it set up. And I do calculate it by the size, right? So we're factoring in the total cost of contracts. And this is telling us that there's about a 10% excess of bids versus asks in nominal values. So that tends to be somewhat constructive. Icebergs right now, and this will reset as the cash session starts, but it's about break even. And I like to look, this is a rolling 30-minute period for icebergs and stops, right? Liquidity differential is real time. Icebergs and stops, it's really about 30 minutes because that's around the time slice that I prefer. So when I'm using time slices, I'll just take a 30-minute slice. It makes it easy to just show the last half hour of trading on screen. And then I have that set up so that what you're kind of seeing on the subchart with the icebergs in light blue and the stops in red is also reflected in these radials, right? So these are sort of accumulations of the excess or the delta between buying and selling. Now, if you, for example, see a really large amount of passive buying and a large amount of stops being pushed out to the sell side, so you have positive icebergs, quadruple digits, negative stops, quadruple digits, sometimes that can mark a bit of a reversal, right? So you look for that qualified in price action as well. And if you see that, you're kind of getting the sense that there is a lot of absorption by larger passive buyers and that a lot of the specs got stopped out. So there's some room. The weak hands got shook out. There's some room for a reversal there. So that's one of the ways that I like to look at the subchart and these radials as just one example. Just like if you see that happening and then the liquidity differential gets even more positive, that's also telling you the order book is becoming more supportive of higher prices. Now, the last radial we have is the CVD. That is the cumulative volume delta. And unlike icebergs and stops, I actually have that for the entire session. So it resets at cash open at 9:30 and it goes all the way through to the end of the cash session. What this is showing you is the difference between buying and selling, right? So it's just a nice at a glance to get a sense as to what the mood of the market is. It's not necessarily something that you can say, oh, positive CVD, prices have to go higher. No, because you can have a deeply positive CVD and you can have sellers absorbing that, right? So it's giving you a sense as to kind of where the underlying flows are, but it's one bit of data to plug into your broader framework, just understanding what's happening with flows. Now, on the lower left to middle, what you're seeing here is all of these radials. Well, I should say 3 of the 4 radials expressed as a subchart in lines, right? So you've got icebergs and stops. Those are accumulating. You've got the liquidity differential. I've actually removed that from the subchart, and I've favored the volume price pressure indicator, or VPI, which I call aggression, right? So this is a little bit different than the default setup for liquidity differential, because I prefer to use VPI to show me where there's that aggression in the order book. So you can see these really kind of light blue-green. This is positive pressure. That light red is negative pressure. And then if it gets more extreme, you get a darker green print up here, or a more dark red. You can almost sort of see that blip print of aggressive selling down there. That gives us a sense as to where there are extremes and sometimes turning points, especially when it correlates with what we were talking about before, like an aggressive stop out, passive buyers starting to step in, and then this reversal of flows and order book pressure. That can be something that you can also see on the subchart as that's playing out. So that's the basics of the subchart. As I'm doing all this, please do feel free to ask questions. I do see questions are coming in. I promise I will get to them shortly. I just want to kind of get through this primer here, and then we'll go through questions, and then we'll start looking at the market live. So next, let's go back to the main chart screen just for a moment. We're going to zoom out just a little bit, because the other thing I wanted to cover is just a few of these other indicators you're going to see on screen. So up top here, you've got this green circle with the number 33. This was a stop run. I'm only showing stop runs that are aggressive. So pre-market stop runs are going to look a lot different than cash market stop runs, but that's where we are, this 33 stop out event. That was a little bit exhaustive for the buyers pre-market, so we did roll over from there after testing VWAP briefly. Seeing these stop runs can be helpful to find potential reversals, especially if they're large enough. The diamond that you see up here is an iceberg sell. Okay, so these are color coded, all of them. Like if this is a buy stop out, that is to say shorts are getting stopped out on the buy side, it'll be color coded green and it's above price. If it's a sell stop out, it'll be color coded red and it'll be below price. These diamonds are icebergs. They show you the flow of a passive seller here. 65 ES contracts were sold here. That did actually scare some of the buyers away a little bit. You could see there was a dip there. And then another one, 50 iceberg contracts sold out. There was another little micro dip. Again, these are more pronounced and larger during the cash session, but I want to at least give you visual examples so you can see what this means when we're actually in the cash session. Now, above price here, we've got the highest price level. This is the pre-market price level. So this resets at 9:30, and that'll help us define our opening range. The green is the lowest price level, which also resets at 9:30 and will help us define our opening range. And then throughout the trading day, we also know if the market's making new highs or lows at a glance without having to have the whole trading day's chart on screen, right? This white line is VWAP, and this is the cash session VWAP. It resets for that as to the point of control. Right now, it's the overnight session VWAP, but in less than 10 minutes, it's going to flip right over. Point of control, so the VWAP is a volume-weighted average price. The point of control is really where the idea of the point of control is really where where the most transacting is happening. So if price is above the point of control, you've got buyers in control, hence the name point of control. Price is below that point of control, you've got sellers in control. And this kind of goes back to that delta idea of the session volume profile. This is another way of illustrating that same idea, right? The further away you get from where people are positioned, if they're on sides, they're going to probably add to those positions. You could see momentum continue. If they're off sides, they're going to exit those positions. So above the point of control, shorts are covering, buyers are buying more, etc. So that helps to qualify what all you see on the main heat map here. So now I'm going to take a break. You guys can write your questions into the chat rooms, and then I'll come right back and we can address them. All right, folks. Let's go through some questions here. All right, the first question is from Jim, and he says, I've gotten a feel for how useful this can be for short-term and swing trades, but how or if would you incorporate Bookmap data for longer-term or investment ideas? So I would only look at that for the execution component. So when I'm forming longer-term ideas, I have a process where I try to combine both the big picture or the macro and momentum into my strategy. So I'll look at what are the global economic trends, where are things going in terms of where are we in the credit cycle, what does that mean for potential opportunities in sectors, industries, regions, commodities, etc. And then I qualify those ideas by saying, am I right or wrong, by looking at the price action and seeing if momentum is in my favor, and if we're in the earlier stages of that momentum, or if the idea is more played out, right? Then once I'm looking at executing where I want to put that trade on, I'm more likely to use Bookmap to drill down into that stock, ETF, futures contract, or otherwise to find an area where I feel comfortable starting to build that position. So it's part of the process, but it's more part of when I already have the idea, I already have the strategy, and now I'm ready to start allocating. Similarly, if I'm looking at exiting and I'm looking at taking some profits off the table, I may dive into Bookmap to get a better sense as to where the liquidity is, where the interest is. Similarly, I'll look at options, I'll look at longer term charts. So it's all part of the process. It's one piece of the puzzle, if that makes sense. Let me know if that helps. Kim says, my Bookmap looks different. If you mean than what you may have run on screen on your own, absolutely. I have thoroughly customized my Bookmap in a lot of different ways. For me, I really want to spend as little time on a chart as I can before I realize what it's telling me. Okay, so I want to be able to kind of very quickly look at a chart and from first glance kind of get a sense as to, is there anything here? Is there an opportunity, or, you know, should I keep moving on? So that's one reason I've sort of customized my Bookmap the way I have. But if you have any questions about the specifics, the settings, the visualizations, etc., you know, that I have, let me know as we go through. I'm happy to share. Lunar Competition says, I've noticed on most trading leaderboards that it's almost always futures or Forex, never stocks. I guess stocks are harder or less liquid. So I don't know about that. I mean, I trade stocks with Bookmap. I've seen others trade stocks with Bookmap. I think it actually is really helpful for trading stocks, and especially when you're looking at options flow and how it's affecting the share action. And there's plenty of really liquid stocks to track. Like I track most of the more liquid stocks here. As you can see, Apple, Nvidia, Tesla, Microsoft, Meta, Google, Amazon. You know, so for those types of stocks, because they're so big, they're so liquid, they're so driven by options, and there's so much liquidity, you know, there's not a compelling reason not to trade them as long as you know what you're doing. The big thing with stocks that people need to appreciate is that stocks inherently have larger risk than almost anything else you'll trade outside of, like, you know, crypto and especially some of the alts. Because a single company can have a very large risk on or risk off event. And it can happen after hours, and it may not happen around earnings. And so your stops can get completely run over, and you can, you know, obviously you could be up or down 30, 40, 50%. It can either be on your side if you're on the right side of it, or you can be off sides of that and getting absolutely crushed. So for stock trading, what I personally do is take smaller position sizes, or I control my risk using spreads and options. But I still think that Bookmap is valuable for stocks just as it can be for futures and, quite frankly, for crypto. I've been looking at Bitcoin more and more in Bookmap, and even looking at some of the So for me, I think it's helpful overall, but it just depends on kind of how you trade, what you're comfortable with. And I think that Bookmap has also gained more of a reputation for being a tool for stocks, or I'm sorry, for being a tool for futures and crypto than it has for stocks. And that just may have to do more with how people decided to use it. But I still find it's useful for stocks, and we'll be looking at stocks during the trading day. What is, Sam asks, what is the economic data that affects the overall market other than FOMC, in my opinion? So actually I have the data to back this up. It's really going to be inflation data, right? Treasury auctions. And I mean any kind of inflation data, like we saw with flash services PMI, when prices paid were coming in much higher than expected, and output prices were on the rise again for both manufacturers and services. That was also seen as inflation data. But CPI, PCE, to a lesser extent, PPI, they tend to move things, but there's a real key here to the nuance. It A, has to do with how the market is hedged ahead of the event, and B, the level of standard deviation of the data versus what was expected. Okay, so it does have to be something that was unexpected for it to be a big mover. The other bit, it's not as much economic data as market data, but it's become a bigger mover, are treasury auctions, right? Particularly 2s, 5s, and 10s. So that's something to think. So the market is about to open, folks. I'm just going to get through a few more questions here, and then we'll start looking at the live trading action. Mario asks, what does the top red line and bottom green line represent? So the top red line here is the highest price pre-market and the lowest price pre-market. Now you can see those are reset, and now these are the cash session highs and lows. So for us watching the market for opening range, or after that, just to know where we're trading without having to zoom out and view the whole chart, it tells us the highs and lows at a glance. And then Mark asks, did Roaring Twitty... God, I really butchered that. Did Roaring Kitty tweet something? GME back up 25% pre-market. So we actually had them complete their share offering last week, and that was seen positively because the company was able to raise something like $1 billion in cash. And so now we're seeing folks kind of piling back into GME this morning, up about 20%. The call skew on this thing is violently slanted, though. It's like really, really, really lopsided towards calls. So I'd be a little cautious on this one. I wouldn't be too surprised to see some of that pre-market rally given back, because you've got, unless these flows really continue, you've got a lot of market makers that are likely to have to sort of distribute into this upward pressure, because they still have a lot of these calls on their books, and unless those flows are coming in and buying a lot more, that natural theta decay is likely to have them reducing some of those hedges, right? Because a lot of these calls are way outside the money, like 30, 40 and up. So hopefully that helps everyone. I think I got to everyone's questions, but as you all have questions as you're watching the stream, please don't hesitate to ask during the stream. So we can see on screen S&P 500 futures have started trading this morning. And as we have the cash open, we see liquidity coming back on the order book. You can see it in the heat map here, right? It's a bit more liquid after the session started than what it was pre-market. And I'm just going to check on one thing, because I do like to have that labeled, and I see that's not on screen. That's the outside liquidity label, right? And there it is. So we can see that order book has just about 50,000 order book depth. So that's decent. It's not great. And we are sort of getting closer to the summer doldrums here post Memorial Day. But you know, it's not bad either. And usually that takes shape as building a bit more as the cash session goes on. And DraftKings is falling among the sports betting tax that is being proposed, as well as some of the regulations that are happening from CFTC. So DKNG, this was one of the short ideas I had on TraderAid not too long ago because of that increasing regulatory scrutiny. So a bit of a breakaway from your regularly scheduled programming, but I just saw it pop across Bloomberg, so I thought I'd mention it. It's down about 8.45% to 37.33. Got the NASDAQ on screen here. Lots of volatility in the open on the NASDAQ here today. Some low pressure selling so far. You can see that with those smaller delta bubbles. You did have a bit of a exhaustive stop here. Not anything too big, but still happened right at the open. And from there, it's been sort of path of least resistance lower. There was a little bit of iceberg absorption here, but obviously not quite enough to deter that low aggression selling pressure. Russell, kind of a similar look here as well. Had a pop and now a bit of a drop on the open. And the Dow, similar, although starting to recover a little bit from that drop and some passive buying coming in. This is a pretty thinly traded contract as well, only about 4.1 thousand order book depth. We are seeing some options flows, aggressive flows for NVIDIA coming in. The 1150s in particular, close to 4 million in premium paid for those, expiring the end of this month and June 21st, with the bigger lot for that June 21st, 3.25 million in premium paid there. And we'll get to NVIDIA real quick here just to see how that may be affecting. Wow, there you go. That demand for options really starting to push the stock price higher. We also had a sweep earlier at the 1115 strike for the end of this month. 618,000 in premium paid for that, and we can see that large resting offer overhead at that same level. So let's go back through some of the other futures contracts here. Crude oil trading higher. It's really had a pretty constructive overnight session here. We'll zoom out just a little bit more to show that. We can see that really from the European Open and even last night, it's been kind of up and away. There was some tension between Israel and Egypt. There are some people starting to kind of speculate what may happen at the next OPEC meeting. All of that is important to the price of crude, so we're seeing it get a bit of a better bid here. And I think this is a theme that could continue for a little bit. I am constructive on crude. We did see a decent amount of exhaustive stopping out here, though, so I would be a little cautious just seeing how it resolves for VWAP. But overall, the overnight pressure is higher, and that portends to me to suggest that we could have a continuation during the regular trading hours. So what I'd be looking for is this 20-minute opening range, which will be done forming by 9:50, and then which way do we break, right? So that's the nice thing about these high-low indicators. Just right on screen, you get a very easy visual representation of where the price pressure is, and also where the opening range is breaking. Natural gas actually moving lower and really volatile overnight session here. You can see it's trading in this range, but overall down about 0.5%, in contrast to crude up about 1.75%. Gold is back on the menu. People are buying again, and I think it makes sense. We could see that really strong overnight price action as well. Really from the European session, gold's had a strong bid higher, moving up about 20 bucks to its from its trough to its peak here. And there could be some room for continuation there, particularly as we see a tepid bid in bonds and the dollar moving lower, real rates also moving somewhat lower. Silver, which is the metal I'm a little more excited about than gold, and if you've been following me, you know that I've been actually a believer of this run in silver and a skeptic of prior runs, because this one is different. And before it even made 11-year highs, I said, I think this is the real bull market in silver. There's industrial demand, there's investor demand, there's a lot of folks that aren't yet participating in the momentum side of this story, and it's so much lower than its 2011 highs than where gold is, which has been making new all-time highs, that I think there's room for it to catch up. That gold-silver ratio a little bit stretched. So I'm pretty bullish to silver, and I think there is room for it to continue running. And I think actually Jerome Powell inadvertently saved precious metals by tapering QT. We got copper on screen here. Copper's having a nice day. Bid up just under 3% here. The industrial metal has a real shortage of supply. This is a structural issue. We've seen some of the speculative excess ease in the U.S. We had gotten a bit lopsided, and we see a really strong overnight bid from the European session. This is another one that I think could continue, right? Not just during the day, but for the weeks ahead. I think copper and copper miners, really the whole industrial metals complex, platinum, which we'll get to next as well, all have room to run, because this is a real story of supply and demand, and there's just more demand than there is supply. Now, over half of copper is used by China, so you've got to be keeping an eye on what China's doing to get a sense as to what's going to happen with copper. But so far, China seems to be continuing to pour stimulus in their economy, really more concerned about what could happen to their real estate market and their broader economy if they do not. So let's move over here to platinum. Platinum is another one that's having a pretty nice rally today, up about 2.4%. And I believe it also was one that kind of started to take off a little bit in Europe, but was pretty volatile. Now that we've started the pre-market in the US and a cash session after that, we've seen a stronger bid coming in for platinum. And like copper, this has a long-term deficit in supply. There's a lot of issues with demand starting to really ramp up. Emerging markets are starting to gobble it up. It's used for catalytic converters for trucks and now for larger cars as well. We're seeing more auto manufacturers rotate from palladium back to platinum. And it's also used for semiconductors. So there's a lot of demand for this. There's not as much supply, and that deficit could last for some time. So, it's another area where one can be constructive. 10-year notes, pretty sleepy. Just overall a tepid bid today on the 10-year. And that's the futures contract I really like to watch around economic events, because it gives you a sense as to where people are with their views on rates, which tend to be more important to watch. And someone asks, are there meme coins on Bookmap? I have to admit, I am not the authority on that. I do know that there's a variety of different cryptos on Bookmap, including Bitcoin, which we'll get to in a moment. But in terms of the memeier stuff, I would recommend asking the Bookmap folks about that one. And if anyone knows the answer, feel free to chime in. So Kim asks, is NASDAQ more heavily traded? Does it have more vol and liquidity than the Dow? I mean, yes, overall. So just quickly backtracking here. So look at the NASDAQ order book. There's about 8,000 contracts, like 7.7 thousand contracts on that order book, 7.8, whatever, it changes by the moment. The Dow is about half that. It's like 4.3 thousand. So there's definitely more liquidity on the NASDAQ. And then if you look at the composition of the NASDAQ versus the Dow and how they're weighted, the NASDAQ is a higher beta index. And it makes sense given that it's like really these large 10 tech companies at almost half of it. Right. So yes, the NASDAQ is more liquid, but of all the equity futures, the S&P is much more liquid. Right. And a lot of that has to do with the effect of it being sort of the center of the world of US equities, the amount of options market participation, the amount of hedging that goes on into it in futures and options, etc. So, if you're looking for the most liquid US equities trading vehicle, it's going to be the S&P, followed by the NASDAQ, then probably the Russell, and then the Dow. The Dow can be kind of brutal to trade sometimes. The slippage is not always amazing. That is to say that there's not always great fills on that contract. So, that's more of a swing trading vehicle than a day trading vehicle, in my view. Here's Bitcoin. It's been kind of all over the map over the weekend. Earlier, it was doing really well. In fact, this is going to be one of those times I'm going to kind of just sort of backfill some of this more historical data so we can see some of that in Bitcoin. Because I think it's interesting. This thing has been sort of all over the map. The other thing about the Dow is you have huge event risk around earnings for any of the higher priced components of the Dow's weight, because the Dow's weighted by price. So you have to be kind of careful of that, because that can drag the whole index lower, or you can have sympathy selling if one of the big components has something good or bad happening, particularly for sympathy selling, something bad happens, and then other components that are related to it also get sold down. Right? So we are pulling this back for Bitcoin, just filling all that data in. One thing that's kind of neat about Bookmap Global Plus is you can backfill tons and tons of data. So if you do want to get a look at the multi-day view and kind of where things have been from a liquidity perspective, it does give you that potential. It just takes a moment to pull all that data, because it is a lot to process, right? So we'll give it a moment. I do have like the maximum number of instruments loaded on this thing. So, and it is the cash session. So it does get pretty busy. Here we go. And overall, Bitcoin had a nice bid in Europe. There was a lot of exhaustion up here. And then we started to see this roll over again. So I think this is a pretty interesting one to watch. To me, it's more of an illustration of sentiment, of risk appetite, because what's more risky than something you can't really value, right? If you don't know what it's worth, then what you're really relying on is someone else being willing to buy it for more than you bought it. And so that's kind of like the primary impetus for this thing. It's just pure momentum and psychology. So for me, it's a great heuristic for, you know, what people's sentiment is. Right. So today in the world of crypto, Bitcoin is a little bit down. Ethereum still has some upward price pressure in anticipation of that ETF. And I think it's an interesting one to watch. So you can pull it back. You can see that I've been experimenting with some of these indicators that I'm working on for it. And I will be looking at crypto a little bit more as time goes on. But for today, I'd say, you know, wouldn't be too surprised if crypto kind of like Bitcoin kind of bases around 67,500 where there's been demand before, and then maybe get some upward price pressure from there. Let's take a look at Apple here. Nice.
Sweep ESM for CME sellers at 53.22.
So this is really interesting here, and we'll get back to that in a minute. But I really like this for one big reason. What Apple is showing you here is this classic ping pong game between resting bids and resting offers. And this is tradable, right? So for me, what I would be looking at if I wanted to enter off this bounce off the resting bid is where buyers run out of demand, right? Because this is tradable in the sense that you see sellers getting rejected. They don't have enough supply to take it below 191. So you get this rise, and it chews through supply until it finally gets rejected up here. And this is where I take off this trade, capturing maybe about $2.75 or $1.75, because what you're, and that's almost a 1% move in Apple. So it's not bad. But what you're seeing is, okay, sellers don't have the supply here to take us below this offer. So we're going to grind higher, because the natural, you know, state of a three-way auction is, well, when there's not enough supply to move lower, then demand's likely to pick up. And I want to be on the right side of that demand until that demand runs out. So we chew through 192. We chew through 192.50. We get up to this really big resting offer where I'd be more cautious at 193. And then we get rejected. And it's in that rejection that I would be done. Like, I don't need to see it go down more than 20-25 cents to say, okay, that's enough. I captured some quick profits. This would be a trade that took about 10 minutes, and then I'm out and I'm looking for the next opportunity, right? So it's a beautiful illustration of using resting liquidity to trade stocks in Bookmap, because someone earlier was saying, you know, they don't see folks trading stocks in Bookmap. Actually, it's great for trading stocks. Like, it gives you a view that is useful in whatever asset you're trading, as long as there's a liquidity to trade off of. And since Apple is mega ultra super liquid, I mean, look at the amount of shares between the bid and offers, like 7 million depth. That's a great trading vehicle, right? So I think you can very easily trade stocks with Bookmap. And we'll go in alphabetical order here. Here's Tesla here. I'm sorry, here's Amazon here. I had Tesla on the mind because that was the last one I clicked on. This is one that's a little bit different. So I don't see that same trade setup in here. So this would be one that I'd be more watching. Right now, if you're just a chart trader, you could say, well, there's a left shoulder, there's a head, there's a right shoulder, and then we broke the neckline here, so you could fade it down. And then we got rejected so far at this resting bid, so that might, well, not any longer, but you know, that could be an area to sort of say, okay, I'll at least target the cash session low to cover, and that's a quick, you know, $1.50 trade, or maybe at least $1, right? If you're getting out of this down here and you're entering that trade as it breaks the neckline, you've got an intraday head and shoulders pattern to day trade on a stock, and you kind of define your exit by where that cash session low was. And that is an area where demand has come back in several times, including just now, right? You can also see that's on the session volume profile, an area of highly aggressive selling. So it could, again, be an area of a bit of interest, because if you're on the wrong side of this, you might be okay to just get out, break even. It's a very common thing for folks that have been on the wrong side of something. It gets a bit painful. Just say, fine, I'll just get out, break even. I don't even care anymore about the trade. So that's another reason that, you could use this chart even just off the pattern and off the price action to trade Amazon. Google, an interesting fade from the open, but again, getting close to an area where there may be some demand. So this is more of a chart showing us that, hey, we got through the supply zone, but that was about all buyers had, right? They got through that supply zone, then they sort of became exhausted and we started rolling over. We broke VWAP, selling pressure continued. So this isn't a chart that shows me that I have any edge, right? I would look at this chart and say, I need to wait because there's nothing on this screen that tells me there's a trade setup happening here right now. Meta's looking a little bit more interesting. You do have this resting bid below at 475. Be interesting to see if we reject that again and get some more volume to the buy side. Then we might get up to this 478 level or just below 478 level where there's that resting offer on this, just around VWAP as well. So, you can use Bookmap for stocks. You could see Meta, this was a decent short opportunity earlier. It rejected that resting offer at 480. And when it rejected it, there was plenty more room to the downside from there until we got to this sort of resting bid. And now it's starting to base and consolidate. So another kind of quicker trade that could have given you maybe about $3.5, $4. So I think there are opportunities to trade using Bookmap as a mechanism for stocks as well. And for the person that asked, can you view meme coins? Dan from Bookmap has answered that you can view the book for any meme coin that's traded on Binance, Coinbase, OKX, or Huobi, if I'm pronouncing that right, and I may not be, I apologize, including things like Pepe, SHIB, and Doge. You aren't able to view the data for any meme coins traded exclusively on decentralized swaps, however, like Uniswap. So hopefully that helps your question there, G4Sair. So we're going to move back to the futures, just like the name of the stream here. And we did see some exhaustive selling here, but obviously not enough to completely stop the selling pressure as we moved a little bit lower before we started basing. But sometimes this exhaustion indicator that I'm working on can be a little bit of an advanced sign that sellers are getting ahead of themselves. And just give me a moment. I'm just going to do a few things here. And we're seeing more sweeps coming through for NVIDIA, both inputs and calls now. Pretty interesting. Both sides of the trade reasonably aggressive. Most recently, 1150 on the calls again for June 7th, 319,000 in premium paid for those. SMCI 910s, 258,000 in premium paid for those, expiring May 31st. And so we talked about the SPX options visualizer. We can see those flows are printing on screen now. You have the most active put as the hot put, the most active call as the hot call, the second most active put as the warm put, and the second most active call as the warm call. Why do these levels matter? Because they're showing you where options participants are expressing interest, and it's converting that from SPX, where most of the options trading happens, right? It's much less in SPY and even less in ES. The vast majority happens in SPX, 1.2 trillion of notional a day. And that really moves equity futures because, again, they're only trading about 400 billion of notional across all U.S. equity futures. So when you look at options flows, it can give you a sense as to where moves can ultimately go. So for me, it's really helpful, the active flows, the warm and hot flows, but also the resting or, the already positioned interest in these gamma levels where we can see gamma ordered by the amount of gamma positioning, right? So gamma 2, the second largest, 3, the third largest, 5, the fifth largest, and then key, these are levels where there's positioning on one side that's much more significant than the other. So this would be a pretty aggressive amount of calls over at 5,500, but the most aggressive amount of calls identified by that wall of calls, which correlates to SPX 5,400. So this all just gives us a sense that if we're trading this, whatever our time frame is, these are levels of interest that much larger participants, largely institutions, are telling us are important to them. So for us as smaller traders, we should consider them to be important to us as well. And the midpoint coming on screen here from the advanced SPX options visualizer, because we are in relative balance. So the market's a three-way auction. There's excess supply or selling, downtrend. There's excess demand or buying, an uptrend. And then there's consolidation or a relatively even distribution of both. When the advanced SPX options visualizer identifies an options market imbalance for SPX, it draws the midpoint between the four most active strikes. This helps to give us a sense as to where there may be gravity in a more balanced market. And it also brings us back to VWAP point of control, just between the two, because you can see, again, how options and where futures are trading have such a tight relationship. And this lower line here is the bottom of that 20-minute opening range. This red line up top, the top of that opening range for that same time frame. So now we're looking for a break one way or the other to see if we get any kind of opening range trend day. Now, this opening range is not too inspiring. It's about 11 handles, so it's a pretty small opening range, all things considered, which suggests this is probably not going to be a particularly volatile day based on prior statistics on opening range, unless there's a greater catalyst, right? Now, we do have a US 2-year note auction at 11:30 and a 5-year note auction at 1 p.m., so those could be important to watch today. We also have Kashkari beginning to speak now and consumer confidence coming in from the conference board at 10 a.m. with an expectation of 96. And we are starting to see that 20-minute opening range taken out to the downside by just a hair. There's a little more follow on. So we could see that hot put targeted by some of this selling pressure. And below that, we do have the gamma flip level, which is pretty important. And then below that, the second most active put, that warm put, just around ES, just above 5,000. Let's call it 5,301. 5,000 is quite a ways down. Lunar Corporation, could you expand on your question just a little bit more there? Kim, I don't typically trade the open. I like to look at the 20-minute opening range and then get a sense as to whether we have a trend day. And then I look at trying to trade those extensions. For me, that's been a bit more reliable. Now, there's obviously exceptions to the rule. If I feel like we're coming into a market that's really out of balance and maybe the open's going to correct that balance a bit, I might trade the open briefly. But most of the time, I'm not trading the open for day trading. You know, for swings, I like to look at the open and close for putting on and closing swings, particularly the close, because it tends to be more liquid. And Kashkari is talking now. We're just about 2 minutes away from CB consumer confidence. I'll stay on for just a minute or two after that confidence print just so we can see the reaction. Last time we got one of those, it was way worse than expected. The market reacted rather poorly to it because inflation expectations were moving higher, as I recall. and they have released the Kashkari. He is saying that he doesn't think anyone has taken rate hikes off the table. He goes on to say wage growth is still quite robust. The short-run neutral rate may have gone up temporarily. Policy is restricted by most measures, but not all. And if surprised by the data, the Fed will do what we need to do, he says. Yes, Lunar. So I see what you're asking. So Lunar is basically talking about how liquidity moves with the market. The active liquidity kind of moves around with the market. There's a sort of bracket around price. That's going to be high frequency trading algorithms and market makers that are moving around with price. That's very common. And one thing also you can see is there's no liquidity right now, right? You see that? How it all dried up? That's right ahead of an event volatility catalyst. This always happens. This is why it's risky to trade events, because you're not going to get the same kind of fills, right? So you need to be careful trading events when data is being released, because, you know, you can get wild moves if the data comes out outside of where it's expected to come, especially if you're on the wrong side of that. CB consumer confidence comes in at 102 versus expectations of 96. So that is better than expected. Now, the question is, why was it better than expected? And I'll have to drill through the data, and I'll post on that a bit to discuss what all is in that release, that report. But overall, not much of a market reaction in the S&P. Let's take a quick look at the 10-year note. Ooh, 10-year note did not like that data at all. So rates moving a bit higher on the 10-year. We'll just zoom that out. You can see it started even before the data release, but it's continuing into it. Some passive distribution up top, some buying now coming in below. And we're starting to see those rates move a bit higher on the 10-year, as obviously it moves inverse to price. That could put a little more pressure on equities, particularly the Russell, right? And you see that here. The Russell is just such a rate-sensitive index. It's moving lockstep with the 10-year price. NASDAQ isn't as rate-sensitive, but it is somewhat rate-sensitive, and it is seeing just a little bit of a pull. So, folks, that's going to do it for me. Really appreciate you all tuning in. If you're interested in TraderAid, visit us at TraderAid.com. You can get up to 20% off for a limited time using the code Mayhem20 at checkout on your first month or quarter. Our Discord community is awesome. We've got traders of all skill levels, got a lot of educational content, ideas for trading the markets, and much more. It's welcoming for folks of all skill levels. If you like what you see on screen with Bookmap, definitely check out TraderAid.com/Bookmap. You can get up to 40% off. Just scroll down to the specials. That's TraderAid.com/Bookmap. If you're interested in the advanced SPX options visualizer that you see on this rightmost column, you can have this on your Bookmap as well when you're trading S&P 500 futures with Bookmap data, DX feed, or Rhythmic. Visit TraderAid.com/SPX. That's TraderAid.com/SPX. To follow me, go to Twitter or YouTube or Twitch and check out Mayhem 4 Markets. That's Mayhem number 4 Markets. And then finally, to learn more about my investing and long-term views and institutional consulting services, visit macrovisor.com. Thank you so much for everyone for tuning in to this edition of Back to the Futures with me, Markets and Mayhem. I'll be back to live stream how I use Bookmap next Tuesday at 9 a.m. Eastern. And in the meantime, I'll be doing some other live streaming on the market. So stay tuned for more.